Hi, this is Mark Item with HONU Trading with the weekly review for the week of August 7th, 2023. As a reminder, this is for educational purposes only. Know your time frame and risk tolerance. We're going to spend a little more time on the longer term weekly time frame, and I'll also spend some time on the shorter term or swing trading time frame this week. So it's critical that you know your time frame and your risk tolerance. Also, never forget risk management is job one. Follow me on Twitter at HONUMGMT, HONU Management. Today's agenda, it's Micro Squash and Snapple. Two earnings reports that got sold off this week. Now, it's always the market's reaction that matters, not what you think the earnings were positive or negative. Did they meet? Did they beat? Did they sound bullish or sound bearish? It's the market's reaction that truly matters. So with two of the biggest big caps, Micro Squash and Snapple, we had our third pullback week out of 10 since breaking above SPY 420. The heat map definitely had the red Valentine's Day look, especially for the biggies. The third biggest stock, Amazon, was the one bright spot. So as a big result, the smalls outperformed the biggies this week. And I'm going to introduce for the swing traders, Brian Shannon's 5-day moving average. Risk on remains in effect. The financials are still out of the woods. More earnings, although lower key this week, and then CPI and PPI on Friday. If you find this valuable, take a moment to smash the like button and hit subscribe for more content. So here's the heat map for the week. Definitely red, especially the biggies. Apple, the biggest, down 7%. Microsoft, second biggest, down 3%. Amazon, the third biggest, was the one bright spot. Google, Nvidia, Meta, Tesla, they all sold off. So on the Magnificent Seven, the only one that had a positive week was Amazon. And still a pretty red week for most of the rest of the S&P 500. So as a result, our relative strength measurements, the equal weighted SPY to cap weighted, that held its own, as did the equal weighted Qs to the cap weighted Qs. But the equal weighted mid caps and equal weighted small caps actually gained some ground relative strength to the SPY. So let's take a look and go into the Wayback Machine from 1 week back. Last week I had the good fortune, I guess I'll call it, to title the weekly review The Bull Abides. Well, maybe that was the kiss of death, I don't know. SPY was 4.28 off of its all-time high, and it gave up a little bit this week, but note that we still haven't even hit the 10-week moving average, which corresponds to the 50-day. For the week, volume was below average, although it did count as distribution, but so far an orderly pullback. The Qs last week were only 6% off of the highs, and that had been perhaps the strongest trend of all, so it's not surprising it got sold off some as well. Average volume, again, not touching the 10-week or 50-day moving average yet. It gave up nearly 3% on the week, so that had the worst performance. But still, so far, I'd say an orderly pullback. Last week, the mid caps were 7% off of their high, and the moving averages, the 10-week above the 30-week, above the anchored volume weighted average price from the all-time high. Gave up some this week, but only 1.2%. So much better than both the SPY and the Q. And the best one for the week, last week, the SPY, the smalls, down nearly 20%. They gave up a little bit this week, but they were only down 1.15%. So they were the best performing on the week. Now let's switch to the other time frame from the longer term weekly time frame into the shorter term swing trading time frame. On 15-minute charts, trends tend to last a few days to maybe a few weeks. And I want to introduce this concept I learned from Brian Shannon. You can follow him at Alpha Trends on Twitter. Don't buy below a declining 5-day moving average. So when we had the Microsoft sell-off, when Microsoft got micro squashed, that dropped below and the moving average started to decline. So from a swing trading perspective, this is no longer a buy. Risk is now off in the swing trading time frame, whereas it's still risk on in the longer term time frame. Okay? So the key point to recognize is that a 5-day moving average on a 15-minute chart is actually 130 periods. 4 15-minute periods per hour, 6.5 hours in a trading day, 5 days in a week. That's 130. So this is one rule that Brian says has saved him more money than anything else he's learned. So don't buy below a declining 5-day moving average. Back to the intermediate term time frame and our relative strength index risk on, risk off measure hat tip to Chris at Chivaco Capital. This is the S&P 1500. That's the 500 big, 400 mid, 600 small relative performance to the 3 to 7 year Treasury bond ETF. Now, from a longer term perspective, bonds will almost always outperform stock. But this does give us an intermediate term risk on, risk off measure. And risk on when bonds are not preferred to stocks, in other words, stocks outperform. Clearly risk off during the COVID crash. Risk on during the rest of 20 and 21. Risk off during 2022. Long period of time, not just here, but here, when no trend. And then finally, risk on again. Now that fell back a little bit this week, but still risk on in the long intermediate term. Financials, they didn't give up much on the week. XLF is still above, flirting with the level just before Silicon Valley Bank fails. The bigger banks didn't give up much at all, as did the smaller banks. Earnings this week, on the big caps, you've got Lilly, UPS, and then Disney. Baba, for those of you who trade Chinese stocks, personally, China stocks are on my restricted list because you have no idea what the accounting standards are in China. You'll also have a couple of market-leading stocks, SMCI and Ionic. We'll see how those react to earnings. And then perhaps the best performing EV stock, Rivian, other than Tesla. We'll see how those react. And finally, I'll end with just a little bit of lightheartedness for the bulls and for the bears in the room. Here's 4 bears arguing over who gets to eat the fat hiker. So things pretty much remain the same. The one thing I did introduce this week for the swing traders was Brian Shannon's 5-day moving average. And as my buddy HONU always says, keep your losers small because small losers win.